Right. That was
And we're
incredible.
live. I got to do my little what's up, guys? Welcome back to the Crypto Kindness channel. After 2 months hiatus, we're giving it another try. And so far, failing. I'm late. My computer decided to update itself 5 minutes before the stream. And yeah, so hey, whatever. But I'm happy to be back here with Jake Sharp, the man, the myth, the legend. Always well dressed, always talks way too damn fast. But brings some really, really good fire, if you will. Alpha content is, I guess, the big buzzword. So how you doing, Jake?
I am doing good. I'm looking forward to this.
Yeah, me too. I'm glad you're here. Thanks for being the first guy to get back into stream with me. I've been wanting to do a solo with you. I've done two group streams with you, but we've never talked one-on-one. So thank you for being here. What's the good word today, man? You're over in Europe. What's happening? What have you been up to? It's a little bit later there than it is here.
Everything's good. I'm excited about all things crypto when it comes to the bear market. Like when it's the bear market, I get even more excited. I'm like the opposite of most people because the way Richard put it is actually very simple. Now you can buy more for less. What about that is not exciting? It's even more exciting. So I'm very excited about this bear market because I'm focused on the bull market. I'm focusing on on things to come. So when I'm acquiring crypto, I'm looking at what is this worth in 2 to 3 years, and I'm buying dollars for pennies right now. So I'm a very happy man.
Okay, that's going to end up on Twitter as a video clip. I'm buying dollars for pennies. Right on. Okay, and that's it. That's your alpha for the day. I appreciate you being here. We're gonna walk Oh man, that's so cool. So tell me a little bit more about that. You're excited in the bear market. One of the things that I've noticed, I've put out a couple tweets recently that have gotten a lot of notice, but there's also been a lot of negative response. Like, I've given up and I bought Hex at the top and it's been a year and now my stake is worth, 90% less. And there's a lot of despair out there. So what would you tell somebody if you were sitting down with them over a cigar, which I know you like to do, that's kind of in that mind space right now?
Yes. So when it comes to that, I mean, at some point in our crypto journeys, we've all bought the top of something. And the thing you have to realize, because if you were to go talk to somebody, a serious investor in the stock market, and you were like, I've invested in this thing for 6 months and I'm down on my money, they'd be like, 6 months. So people kind of have to reorganize their perspective. Like when you make investment decisions, it has to be at least 2 to 3 years because that's where you make the real money.
Yeah.
These traders, trust me, I'm friends with a lot of these traders. They're broke as hell. And a lot of them are my friends. And I say this to their face. They're broke as hell compared to like people who actually do crypto and are actual investors. And when it comes to that, people need to realize that inside of the mastermind, there's a lot of real estate millionaires. And the thing I like about their mindset is when they buy assets, they don't focus on the price of the asset. They focus on the yield that the assets generate. And when they put money into assets, they don't look at it as investments. They look at it as buying income. And when you're buying assets like Hex, PulseX, PulseChain a little bit less, but assets are productive assets that generate yield, you're essentially buying income. So people should not be focused on the dollar value of their actual principal. They should be focused on the amount of income that they're buying with the money that they're putting into the market. And that's a lot more healthy of a perspective because it also, let's say you have like $1,000 and every year you put $1,000 in and every year you're going to get $100 a year. You'll put as many $1,000 in there as humanly possible to get $100 a year for the rest of your life. That's at least how I view it. So in the bear market, people have this idea that I put money in assets at the top a year ago, but what's stopping you from buying now? If you are willing to buy it at 52 cents, why are you not buying it at 3 cents? I mean, I can assume that a lot of these people are productive people in society that have a job, maybe they have a business or something like that, and they're generating income. So when it comes to productive assets, you never stop buying. Real estate, multi-millionaires, they never stop buying real estate. They are cash poor, asset rich, and the assets pay them yield. And everybody should look at crypto like that. That's my perspective, at least. And I think that really relieves the burden because you're not buying once. People that buy once usually don't become rich. People that buy all the time because they want to turn their worthless dollars into productive assets usually do very well over a long enough period of time.
Okay, I want to repeat what you just said. People that buy once don't do well. People that buy all the time do well. That's a really fancy way of saying dollar cost averaging, but I do like it. And I mean, that's a huge that's a huge thing to consider. Is if you were willing to buy it when it was on its run, and when I say it's anything, it doesn't matter. Bitcoin, Hex, yada, etc. If you were willing to buy it when it's on its run, either A, you were buying it for the wrong reason because it was just straight up FOMO and you thought you were going to become a millionaire in 3 weeks, or B, you actually believed in the product. So why not continue to buy it on the way down? And as where we sit right now, if not the bottom, awfully close to the bottom. So this is the time to get rich, not send out tweets about how everything sucks and this was a scam and a rug pull. Because it doesn't matter what you put money in a year ago. It does not matter if it was stocks, if it was bonds, if it was crypto, if it was real estate, you done lost a bunch of money. But you have only lost money if you sell.
That's one way of looking at it.
One of my favorite lines from the movie Ace Ventura, just wait longer.
Yes. And then one of the things that I also wanted to mention is people should just be extremely happy buying at the bottom of a bear market, because historically, from the second top, bear markets have only lasted 365 days, and everybody keeps shouting, this time is different. But has it been different? If you look at the cycles, it's almost the exact same thing playing out over and over and over again. People, could it potentially be a little bit longer? Yes, but a form of correction is not always things going down. That is correction, very clear. Things are going down, correction. But the second form of correction that nobody seems to talk about is it going sideways. That is a form of correction in and of itself. So could this bear market? I think Bitcoin, like Richard keeps calling it, 11K and pray, 85% correction usually happens in bear markets. Hex, on the other hand, has been showing a hell of a lot of strength at this 3 cent level.
Right.
Things have been going down 10%. Hex only goes down 3 to 4%, which is very interesting at these price points. And usually when everybody is calling for lower targets, the sentiment in the market when it's at its lowest is usually where bottoms start forming, where people expect lower prices. And everybody's calling for 1 cent Hex, which I to be honest, I don't see it happen. At 95% corrections historically have been very hard bottoms for altcoins. And everybody looks at Hex. Hex is down like whatever, 93.5 or 94% from its top. But so is Phantom. Is Phantom a scam? No, it's not. Phantom is a very, very good L1. And it's also down 93%. Everything is down. The thing that you need to be focused on is what historically has pumped the hardest. And history tends to not repeat exactly, but it tends to rhyme. So I kind of look at corrections as catapults. Like a catapult doesn't just shoot out of nowhere. It pulls back. And then the farther back it goes, the higher up it goes. And the same thing goes with assets. The lower they go, the more gains you actually have. So let's run a scenario. Hex goes back to its all-time high, 50 cents. And usually when people call, okay, the bull market is back on again, and that's when people get into the market again and everybody starts flooding in, that's when you make the least amount of money. Because that's when Bitcoin breaks its all-time high again. And with everything we have coming up with the documentary, with the PulseChain launch, with all these big catalysts, we also had Maximus locking away like, what was it, like a billion Hex out of circulation. Then we had the two sacrifice phases for PulseChain, PulseX taking hell of a lot out of circulation. A lot of the sharks and Hex have sold. I'm getting very bullish. I do think we're going to get the crypto bottom around November, because that's historically 365 days from the top. And then I think we're just going into an accumulation zone. But then the things that have the catalysts coming up and that have big things happening in their ecosystems, I think they're going to recover incredibly fast, especially on low liquidity assets, stuff like Hex. So I'm actually very bullish on Hex currently.
That's fantastic. Now, one thing you said there that I kind of want to elaborate in is the idea of sideways trading. I feel like there's this expectation that once the bottom is in, it's just going to be, to the point you said, a catapult straight up. And it's not going to be the case. Usually by the time the media starts talking about crypto again, and by the time you start hearing the fever pitch, you've already missed a year and a half worth of great accumulation time. Yeah, we might hit a rock bottom, if you will, in the next 1 to 4 months. But even after that, it's going to be a slow tick up with a lot of retests back down. And it's going to be gradual. And the next year, I would say, is perfect opportunity to just keep dollar cost averaging. Now, it is important to not dollar cost average into crap, because there's a lot of stuff being launched. There's a lot of shiny objects, if you will, trying to gather your money in this bear market. Some will do well, but find quality PulseChain. Obviously, they're not out yet, so we can't really buy them. Hex is good. There are some layer ones, like you mentioned, Phantom, down 95. It's probably going to have a good run. Learn how to do some research, learn how to read charts, and stay focused. Don't get distracted.
I agree.
Which
And
I have.
then,
I'm sorry. Go ahead.
well, one last thing I wanted to mention with the last point is people call for bull markets again when Bitcoin is close to its all-time high or breaking through its all-time high. But let's say Hex is back at 50 cents at that point. And if you get into the market then when it's official bull market and everybody is excited about crypto again and ooh, yeah, we're going to make so much money. And Hex is only a 3x from all-time high. Well, you only made a 3x. But if you're buying in a 95% correction, which is 20x down from the top, you're not getting a 3x, you're getting a 60x.
Yeah.
That's a massive amount of difference. So you want to buy when it gets boring. And when it gets boring is when I get very excited. And that's also why I started the whole YouTube channel and everything I'm doing currently during this bear market, because I just see the opportunity and I don't feel bad getting people into crypto now. I actually feel very good about it.
Well, absolutely, because you know that you can be confident. I'll say that if they can put in the time, they're going to have the reward. I mean, it's just like, hey, buy Hex, like you said, you're buying dollars for pennies today, and you'll thank me. But you just gotta take a little bit of leap of faith, and that's where talking to people like yourself that understand the market really pays off. The bear market is a great time to learn. It's a great time to do research. I'll tell you the things that I've done differently is I've spent a lot of time learning how to read charts and looking at cycles, because if I knew now what I knew, a year and a half ago, I would not have put as much money in the market. It was very obvious it was coming towards the top. But just use that information to your advantage and move forward with it. Turn your W's into L's. I said it backwards.
Yeah, I was like, very motivating.
Okay, and don't listen to anything that Jeff says. Wow. Okay, that's also going to be a clip, but for all the wrong reasons. Turn your L's into W's, guys. We have 40 people listening that are just like, Jesus, what did this guy just say? Speaking of the 40 people, some of these people are here from your group. We got RH Max in the house. Raiden Kyle. That's kind of a cool name.
RH Max is awesome. I like his channel.
Oh, he's great.
Doing good work. Yep.
He's a smart dude. Kelt Hex, aka Gaiman. I don't know what Gaiman is. Hopefully I said that right. Let's look at this one. Crypto Jack 3. Does anyone know if Pulse Bitcoin will be released once Pulse goes live? Haven't the foggiest idea. I don't think it's even out yet. Do you?
Yeah, I'm kind of up to date on everything, and I don't think it's out. Yeah.
That's a play off of PLSD. I think the same person is doing PLSD, Pulse Doge, excuse me, is launching Pulse Bitcoin. So I don't believe that's out yet. And I mean, yeah, it's got the Pulse is in the name. So I'm sure that once PulseChain comes out, it'll also be live. Hazek's in the house, Hexbor, Finbear. I always love having Finbear. He's one of the guys that always comes out and says hi. I really appreciate that. Hex on Air, iGuy. This is my man. He's here, always here for me. Very much appreciate it. Tommy, thanks for being here. We've got 40 people in the chat. Honestly, that's about 40 more than I expected to be here this morning because there's just not a lot happening right now.
Which is very exciting.
That's exactly it.
Yep. I have a good way of reframing everything.
My smile just turned upside down. How'd I do that?
Hey, turning W's into L's. He's listening.
Oh man, if you can't laugh at yourself, you're just not living life right. So it's PulseChain going to launch. Is PulseChain going to launch? So many people saying, "Oh my god, it was a rug."
Yeah, so I put this thing on Twitter. I'm extremely happy that the sacrifice delay has been so long from sacrifice to launch because we've been protected against a massive bear market, so macroeconomic events. And then also, if you sacrificed in the pound or if you sacrificed in the euro, you also got protected against a 30 to 40% downside on your fiat.
Yeah.
So if you just had your cash, you would have been 30 to 40% poorer when it comes to the dollar terms, which is the global reserve currency. So you're not only protected against a 70% downside in crypto, you're also protected against a 30 to 40% downside on your actual fiat. So I am extremely happy, but also extremely impatient, like all of us. But I know it's a good thing.
Well, what's important to know is for all the people that are kind of belly aching about how, it was supposed to be out by now and all this type of stuff. My question to them is, are you going to sell on day one?
I hope they do.
I mean, you and I do, sure. But honestly, if you're not going to sell it on day one, then what the heck does it matter if it's out right now or not? I mean, this is PulseChain is going to need to go through its first bull market before you have any of the real 100, 250,000 X's that people are expecting. So that's 3 years away. 2025, late 2024, mid 2025 is based on the cycles, probably going to be when the peak of the next bull market is coming into play. So that's the first time anybody should really even be considering selling anyway. So what does another month matter? What does another 4 months matter if it doesn't launch? Unless you're preparing to sell it on day one, please do. Jake and I'll be ready to buy. But come on, man, just stop belly aching. Think big picture. You wouldn't put money into your 401k tomorrow at work and be like, I need to get this out in 2 weeks. It's a 15-year play. It's a 20-year play, depending on how old you are. So just treat crypto and good projects the exact same as you would your retirement account. Quit looking at it. Don't look at it every day. Don't think about it every day. Just go to work.
I agree. That's good. So I also see other people in the chat. Rob Dixon is here as well.
Oh yeah, we got a lot of people showing up. Really very much appreciate it. Crypto Cal, we got Sandip, Ben Burrows. What does Ben say? Not sure if my question was posted, but def interested. Take your dry powder appropriation. Okay, so dry powder appropriation. Let's talk about that. I know there's a lot of different strategies. There's a lot of different scenarios. So first and foremost, Jake and I are not financial advisors. You probably picked that up when I said to turn your wins into losses. But there's so many different scenarios surrounding what could happen. It's a smart idea to consider them and come up with a plan in case each rolls out. So Jake, since you're clearly the smarter person in the room, let's start with some of your thoughts on scenarios that could play out and what you are thinking in terms of preparation.
Yep. I also see Hex McKenzie in the chat. She's awesome.
Oh, I love
Dude, her designs are insane. Anyway, before I get distracted.
We're going yachting together, actually, Hex McKenzie and I.
Oh, nice.
Yeah.
So when it comes to that, I'm a very big believer in, because nowadays in the world that we live in, this is going to get very philosophical, but you want to be in highly cash flowing businesses with high profit margins that don't depend on gas and energy and all of this stuff to run. So you don't want to be in production. You don't want to be in factories. You want to be in consulting or something similar like that, where you have high profit margins, because that way you get the least downside from the gas price going up and electricity and the world going into chaos, and you can deploy as much cash as you humanly can into crypto, because I'm a big fan of buying things at 95% off and not when they break all-time high. Call me crazy, but I'm a crypto Super Bowl. So basically all the cash I have goes straight into crypto. My philosophy is, and I learned it from like a 9-figure dude, I met him when he was worth 7 million. He's worth 100 million plus now in 3 years, and he doesn't do crypto. He's like a very traditional business guy. Okay. And he taught me this idea where in your personal account, you want to have 6 to 12 months of living expenses. In your business account, you want to have 6 to 12 months of operational expenses. So your ad spend, your marketing, your team, etc., etc. You want to kind of calculate that. Yep. But anything above those amounts, so let's say like 20K personal, 30K business, random numbers. But anything above 20K personal, you invest into the markets. And everything above 30K in your business, you either take it out as a dividend or whatever that is, and you invest it into the markets. So anything above your living expenses and your operational expenses accounts, you just want to deploy it into productive assets. Because the people who got out of 2008, the wealthiest and the richest, were the people who were deploying as much cash as humanly possible into the markets during all the downturns and during all the chaos and everybody calling lower prices and everybody calling the world going to end, you know? So I'm kind of looking at this like 2008, like this is our opportunity. And even if this lasts like 1 to 2 years, you want to use this time to generate as much cash as possible and deploy it into the market and just have a couple of living expenses on the side and operational expenses and just scale down your lifestyle. Because I kind of went from living lavish to like living very normally again. Because I realized the value of my dollar. It's like we talked about in the beginning, it's buying dollars for pennies.
Yeah.
And that makes me very excited. So it's just a late gratification, as stupid as it sounds.
Well, and to kind of point on that, you talked about the 2008 and, the smart people deploying their capital now. Back to what we discussed earlier is learning the cycles. Just learn cycles, learn charts, see what happens, and follow the smart money. I mean, the guys with big dollars were dumping crazy amounts of cash into the stock market and everything else in 2009, 2010, 2011, when everybody else was running for the hills, the world was over. And if you think about it right now in a high inflation environment, governments are printing money, everything is going up, up, up. Holding cash isn't necessarily a great idea if you can be buying discounted assets, especially quality assets, real estate, top producing cryptos that we know are going to come back, buying dollars for pennies. I mean, that's such a smart thing to say. I love it.
Yeah. I don't even know where that came from. These sayings come to me.
Well, if it doesn't make dollars, it doesn't make sense, also that type of thing. But these sayings come to me nice. So we got Crypto Compassion here. Jake, can PulseX do 1000x?
Of course.
I know.
Now, so the way I kind of look at it, it also depends on time frame. If somebody asks me, can PLSX 1000x in a month? No.
Hold on a second. I want you to repeat what you just said because that's the most important thing. What does it depend on?
It depends on time frame.
Thank
That's
you.
the biggest thing. That I always ask everybody, everybody I hop on a call, what's your time frame? And if somebody operates in like 3 to 6 month time frames, I usually you can have a very high probability of them being broke for a very long time. The world's best investors, I just like being upfront about it. The best investors have long term time horizons, and can PLSX 1000x? Yes, because the way I look at it is, let's say it only does a 20x during this bear market until we hit like the next bull market again, and then it does like another 5x from that point. Well, a 5x from a 20x is 100x. 20 times 5 is 100x. And then in whatever the next cycle, it does another 10x. Well, now it's 100x to 1000x, and you reach the 1000x mark. So once you've done a couple multiples, it's actually extremely easy to go up in multiples for like the early participants. That's kind of how I look at it. So I actually think it's very, very normal. I think Bitcoin went up 6.9 million x from a penny or something like that. Yeah, 6.9 million x. So if Bitcoin goes to 100 grand, well, now it's up 10 million x. That's how quickly these multiples can compound. So can it do it a 1000x? I think so. Yeah, especially with the tokenomics of PLS. Like if you were to design PLSX, if you were to design a perfect cryptocurrency, you would arrive at PLSX. That's how much I believe in it. It's beautiful. And also, when you look at Grayscale, and I did a live stream on this a while back. Grayscale is deploying. They have like a DeFi basket or index thing that people can invest in. Don't take my word for it, but they're deploying 60% of their capital of that fund into Texas. So that shows even Grayscale is extremely deep into these DEXs. So PLSX is a blue chip asset, in my honest opinion. Because what is a chain? You have L1, and then you have a way of people to swap coins built on that chain. So the actual L1 and the actual DEX are the two best projects you could be in a chain, especially if you're in early.
Okay. So what you said just there brings us back to another question by Ben, who says, thanks for talking about the DCA. He's actually curious about DCAing into other projects, such as you mentioned Phantom. There's a lot of good stuff out there. What is your thought process? And this is actually one of the questions I had for the day. There is so much available to throw your money at in crypto. What is your thought process on other projects, getting stuff out there? Don't be not all your eggs in one basket type of mentality. But then if you get into that, okay, well, I'm going to spread some money out through some different places. How do you choose which ones to do?
Yes. So I don't believe in diversification. I think diversification is garbage, especially in crypto. Like everybody that buys like 20 different coins is usually dumb. Because how can you keep track of 20 coins? How can you keep track of the user adoption, the ecosystem growth of 20 coins? That is one. And then also, there's no such thing as diversification in crypto and tech stocks. They go up and down together. The idea of diversification is essentially making sure your portfolio is hedged, where one thing goes down, the other thing goes up. But if everything goes down together in your portfolio, did you even diversify? Or are you just all over the place? It's not diversification. And I don't believe in diversification. I'm just not a big believer in it. The best position you could possibly be in crypto is having so in the traditional markets, the people who do the best and live the best possible life with the least amount of stress are the people who have a high cash flowing business, revenue, equity, sales job, whatever it might be. And they deploy that into dividend stocks that generates 3 to 5% a year. They use that to fund their lifestyle. And then they join private banking, take loans against the assets for bigger purchases like yachts and stuff like that. And then they use the yield that their portfolio generates to pay down the interest on the loan that they took out with private banking. Now, in crypto, you can do that. But also, here's the second part of it. The best possible position you can be in crypto is having a portfolio that generates yield, and use the yield to invest into early stage projects, launching on chains and stuff like that, and being early in newer projects. Because then you're not putting your principal at risk, you're only putting yield at risk. And that's essentially infinite ROI. That's the best possible position you can be in. I don't believe in reallocating principal. I believe in reinvesting yield into early stage plays. I believe in that. But if you have an early entry point into stuff like PLS and PLSX, I don't believe in moving your money around. I believe in using the yield to go into newer projects.
So for something like PLSX that isn't putting out yield yet, we just have to wait longer.
Yes, correct.
Gotcha. Now this question is, what do you think about an average buy price of 5.5 cents for, I'm assuming that's for Hex. Personally, I think that's a great place. You're in a good position now with, you can continue DCAing. I don't know where we are today, 3.5 cents or something like this. We got as low as I think 2.9 over the last 5 days. It's going to fluctuate. It's going to go up and back down again. I don't, it's going to oscillate. So if you're buying right now 5.5 cents, congrats, man. You're doing better than me. I think my average buying price is down. It's below 20 cents at this point, but it's still much higher than the current price. But I don't care because it's staked.
You want to know a cool mental trick? So essentially what I do is a lot of people have these portfolio trackers. I don't. Because why do you want to look at your portfolio in a bear market? You just want to focus on the amount of coins that you're accumulating. So when you're looking at your portfolio every day and you see red numbers everywhere, how is that helping you in any possible way? It's like watching the news every day. There's no upside to it. So in a bear market, don't use portfolio trackers. Just ignore your wallets. And all of the money you put into crypto, you have to see it as a black hole until the catalyst show up, the documentary, the PulseChain launch, stuff like that. Then you can go into your portfolio again. But during the blood of a bear market, you don't want to stare at your money going down. You want to focus on asset accumulation. And because in reality trend surfing, you want to focus on the good thing instead of the bad thing. The more you focus on the good thing, the more good things you get. So if you look at your portfolio every day and you only see red numbers, you're only going to get more red numbers. So you also want to kind of curate what you put into your mind. So delete all of your portfolio trackers. It's adding zero to your life. And in fact, it's making you a worse investor. Because in a bear market, you don't look at the numbers. Like the people who are deploying cash into real estate, they were looking at the number of units they were able to acquire, not the ROI on the units.
Yeah.
Units being like number of doors in real estate.
Another good trick is to, in bear markets, focus on your plan and not the portfolio, like you said. So if your plan is to, let's say, get your average buy price in Hex down to 4 cents, put in your limit orders, put in the amount you're going to be DCAing, and only focus on that. Focus on if they triggered, if that, and then you don't need to look at anything else because once again, it's a timeline, it's a time horizon. That's all you need to be worried about is your current plan, not how it's going. Because if you track it on a daily basis, you're just going to drive yourself crazy. And that also goes for the bull market because if you're looking at it every single day, it's going to be hard to control your emotions to not sell when it's finally gotten above a certain point. Although you do have to, which brings us to another point of discussion. And we're a long ways away from this, but talk to me about actually taking profits. Like, how do you plan to do that and how much do you take out? Obviously, you just discussed a lot about just living off of yield and allowing the principal to grow. I think there's going to be a little bit of difference there between PulseX versus PulseChain. Dive into that for me, would you?
Yes, 100%. So I'm half on cycle trading. I don't believe in day trading. All the day trades are broke. Then you have swing trading, bit higher success rate, but still they're broke. Then you have cycle trading, and that is trading the cycles. I'm still half on it because one, it's emotionally a wreckage. Imagine you selling at the top or at least close to the top because you're never going to time the top perfectly. So the way you do cycle trading is you look at timing analysis. So the average bull market runs for like 820 to 870 days. Mm-hmm. So if you want to do cycle trading, you would exit the market at roughly like you would start dollar cost averaging out. Same way you would dollar cost average in, you dollar cost average out with a percentage of your portfolio at like day 750 because maybe the cycles change a bit and you want to have some margin of safety in there. Yep. So you would start dollar cost averaging out, and then an average bear market lasts 365 days. So you exit the market 100 days before. You see the market go up and up and up and up and up. So that's an emotional wreckage because your money is not in the market. You get FOMO. And then once you can withstand that, and you wait for a year and a half of not being in the market with that money, which is absolutely insane. That's probably one of the hardest things you'll ever do emotionally. You have to be out of the market for a year and a half. And then you also have to account for, because these decisions don't happen in isolation. If you're out of the market for a year and a half, you're also not generating yield or recompounding yield back into the market. So as the market is going down, if you're in a yield generating asset like PulseX, where you earn yield in other tokens and you compound it back into PLSX, you are increasing your PLSX position. So to win that trade, you have to take into account the taxes that you pay when you sell close to the cycle top, which is like whatever 23%, 30%. Let's use 30%. So you have to buy back at 30% lower, and you have to also account in the fact that you missed that yield and you missed recompounding that yield. So even if you buy back 60% lower over a year and a half time period, did you win? Or was it all unnecessary? I'm still 50-50 on it.
Yeah, it's tough. It is tough. Okay, we have to laugh out loud at this. I highly doubt this is the real Richard Hart, but if it is, this shit is funny.
This is funny. This is funny.
This is really funny. If this is the real Richard Hart, man, hey, cool. That's cool that you're here. I doubt it. But if it is, you know what? Send me a Twitter and I'll get you a link to jump on with us. Wouldn't that be a cool surprise? Which, you know what? Hey, so let's talk about this. So much has changed. You have met Richard Hart. I have not. But that was what, a year ago? Maybe a little bit less.
Year and a half, I think.
Yeah. Okay.
Yep.
So if you met him again today, if you had a chance to sit down and talk with him, what type of questions would you ask him?
I'll probably talk about girls. Good. Yeah. Okay. My life is actually very simple. I wouldn't ask him any crypto questions, to be honest. Maybe some PulseChain updates, but all of the crypto stuff is in his live stream, and I watched every one of his live streams probably twice. So I don't have any questions when it comes to that.
Okay.
But other than that, good question. I'll probably just ask PulseChain updates.
That's very quotable. I would talk about girls. That's freaking a riot. Well, you know he's going to at least engage you on that conversation.
Oh, girls are my territory, so we'll definitely do it. I won't go into the masculinity thing unless you want your channel canceled.
Well, no, not really, but
yep. So let's stick to making money.
Let's stick to making money. All right, good.
To get more goals.
It sometimes works like that. So a question came up earlier ago. We're up to 63 people in the chat. This is amazing. They're all people that are following you. And so thank you for coming here. The question came up. I'm not finding it right now. Oh yeah, right here. Bob Lee, excuse me. What do we think of ETH POW? That was actually on my list of things of discussion. I know you put out a little video recently. There's a lot of stuff happening. People are talking about, how great Hex is over there. Personally, I believe there's a lot of time before we figure out how sustainable this is going to be. I know you think it's here for the long run. I don't disagree. It's just a matter of level of adoption, even though a lot of the centralized exchanges are allowing access to it. So is ETH POW something that's worth learning, or is it just another distraction?
I wouldn't put... If you have your copies over there, I would keep them. I have a 10-year stake, a 10-year staking ladder on ETH POW. I do think it's going to be around. I did HSIs. My Hex on the Ethereum chain is liquid because I don't want Hex as an asset. I want to get into PLSX and then hold the eHex. So there's two gold nuggets that I can give everybody here, which I kind of talked about in the weekly update. I also posted it on Twitter. Is you want to keep your Hex on the Ethereum chain and never sell out completely, because I think these system state copies are not a once in a lifetime occurrence. We have ETHPOW, we have Ethereum Fair, we have PulseChain coming up. I think these system state copies are going to become the lay of the land in crypto. And the thing that the system state that they're copying is going to be Ethereum. They're not going to be copying over Ethereum proof of work or whatever coins you acquired over there. They're going to be copying over system state of Ethereum. And I think we're going to be the generation in crypto where people are going to start talking about the system state era and all of these people who got all of this free money on all of these different chains, because history is being made now. Like, these system state copies are massive, massive, massive deals. When it comes to like copying over an entire system state and airdropping everybody their coins. Now, Ethereum proof of work, it's literally a copy paste. They didn't put any attention into the liquidity pools. It was a mess. Yeah. But I do think Ethereum proof of work is going to stay around. Ethereum Fair gives me kind of like a random Indian kid vibe, like the way they talk on Twitter, the actual like professionality of everything. I don't like it.
Wait, did you just say random Indian kid vibe?
Yeah, it looks like 2-3 random Indian kids in their closet. That's kind of the vibe I get from it. And I don't have anything against Indians. I think they're pretty smart, but it's not a blockchain worthy kind of thing. I'm gonna piss off so many Indians. I like them, but it just gives me that vibe. I want a more professional vibe.
Oh, that's too funny.
With Ethereum proof of work, it's supported by massive exchanges like FTX, Kraken, etc., etc.
Yeah.
The miners, I think, are going to support it. I think it's going to be going to stay around. So I have a 10-year staking ladder with HSIs on Ethereum proof of work, and you just want to wait for chain maturation because I do see a dump on Ethereum proof of work coming after the PulseChain launch. But then everything's just going to recover up because Hex is Hex, and whatever. So I like simplifying everything down. When you look at an L1, so Ethereum, Polkadot, Avalanche, Phantom, all fancy names, but all there are is they're all expensive databases. They're expensive Excel sheets. And as long as an Excel sheet can take data in and put data out, it's good enough for Hex to run on. So as long as it can survive, I think Hex is going to have a footing in Ethereum proof of work.
So you said something there I want to learn a little bit more about. You said you don't want to own Hex, you want to own PulseX. So, however, previously you talked about owning assets that generate yield. Hex does generate a yield. So help me understand that statement a little bit better. You don't want to own Hex, but you want to own PulseX.
100%.
Tell me more.
So Hex is also a more mature asset. The thing I like about PLSX is the idea that you generate yield, but you generate yield in other tokens with these single-site staking pools. So when you put in your PLSX into a single-site staking pool, you don't earn your yield in the native token, PulseX, native token of the DEX, PulseX. You earn yield in other tokens, which means that the selling pressure on those tokens do not affect the actual native asset. So in Hex, you kind of have a community of net sellers where people create these staking ladders, they sell yield and they restake principal, which is good. I like it. Hex still has great game theory. I just think PulseX outclasses it when it comes to the game theory part of it. Because with Hex, you create a community of net sellers, of people who have enough stakes, where they sell their yield, restake their principal if they're a good participant of the system. Most people just dump. So you have a community of net sellers because the yield is paid out in the native token, and as long as the user adoption is good, which it is, it's fine. It's still going to go up in price. So I'm a believer in Hex. But I think PLSX just outclasses it because you have a community of net buyers. So imagine this: you're with your PLSX, you're in single-site staking pools, you're earning yield in other tokens. We can assume that a large percentage of participants in those single-site staking pools will probably sell down all of these other tokens that they don't know for things that they like. And because they're in single-site staking pools with PLSX, they own PLSX, so we can assume they like PLSX. And a lot of people are going to sell down this yield to buy more PLSX. So not only do you have the intrinsic buy pressure of the DEX using a percentage of the fees to buy up the price, you also have the community becoming net buyers instead of net sellers. Game theory-wise, I think that's a lot stronger than net sellers.
Wow. Nice. So we've got Cryptographics in the chat. Good to see you, brother. He's a cool dude. We should have invited him on, but I missed that boat. So question, do you think the stables on PulseChain will act like the ETH forks, or will they move a little slower downward? And I believe what he means by that is the stable coins on, say, ETH POW started out at $1, but dropped very precipitously in value because it lost its peg, because it's fake, essentially. Secondarily, do you see the tokens on PulseChain acting like the ETH forks? Not 100% sure what that means, but maybe you do. So
I do.
Let's talk about the first part on the stables.
Yes. Yes, they're going to go down just as fast as on ETH POW. So the way you kind of have to look at it is the liquidity pools. The thing that ETH proof of work, all these different names, Ethereum proof of work, they didn't rearrange the liquidity pools like the AMM bot is going to do at PulseChain by buying up one side and replacing Ethereum. They literally just kept the ratios in the liquidity pools. So there was massive arbitrage opportunity for people, for new people coming into the chain and abusing these liquidity pools, which is not good. You're not going to get that opportunity on PulseChain for ETH pairs because the Ethereum is going to get bought up and replaced with PulseChain.
Yep.
So I think the liquidity pools are large enough for it to have a bit of value for like the first 2 to 3 days. But after that, I do think it's going to trend towards zero when it comes to stable coins. And then when it comes to tokens on PulseChain, I do think they're going to... Can you pull up that question again? For the secondarily question?
Yeah.
See if I can find it.
Let me get there.
Do you see the tokens of PLS acting like ETH forks? Yes, I do. Anything outside of Hex, PLS, and PLSX will probably perform terribly until the chain gets maturation, which could take like 6 to 12 months. Yeah. And then, because PulseChain has its own DEX, and there's going to be a massive amount of arbitrage opportunities if it's a mature chain between the ERC20 and the PRC20. So I think the DEX could be the biggest yield farming event, which is another thing that people seem to forget. Could be a massive yield farming event between the ERC20s, PRC20s. And I don't think a lot of these tokens are going to get value until these front ends start supporting it, because then it gets legitimacy in people's eyes and they just see a discount on PulseChain instead of a different asset. Yeah, I think most tokens are not going to perform well outside of the actual ecosystem tokens until the chain gets mature. And then a lot more projects probably going to start supporting it. And it's like a domino, you know? You have one big project supporting it, and then everybody wants to support it. So you want to look for leading indicators of early stage projects supporting it, or at least putting a switch of like going from an Ethereum network to PulseChain network with like the PRC20 and supporting it natively in their front end. Then I do think we're going to see massive amount of adoption. But I do think it's a slow play. I don't think PulseChain is different than Ethereum proof of work because they're all just databases. We just like the database of PulseChain a lot more.
Interesting. I wish I could think as fast as you talk.
I know.
I'm listening to this and I get to a point where I'm like, oh, okay. I'm gonna have to watch this and slow it down. So another thing that I'm curious about, there's so much discussion surrounding what do I do before the bridge? My position on that is the bridge is already built. I mean, it's in test network. So why is there this thought process that there's going to be this big delay between the PulseChain and the bridge being able to bring money in? I think that window is going to be very small. What do you think?
Yeah, I think Richard, the last update we got on that was like 24 to 36 hours after mainnet goes live.
Okay.
So I think there's only going to be 1 day of pre-bridge ratio trading. Maybe he opens it up from day one. There is game theory that would support that. I don't see as long
I was
as
under the impression he didn't build the bridge. I thought the bridge was built by outside folks. So would he have is that within his control?
Good question. I think if the bridge opens up day one, that would take a lot of the risk from like pre-bridge ratio trading away because people can just bridge in actual dollars and build liquidity pools with actual dollars. So people would not have to trade on ratios. You could trade on dollars. You just have to look at wrapped USDC, wrapped USDT, wrapped DAI instead of like USDC on PulseX. So you know when you check dollar values of like Pulse to USDC, you would not use USDC. You would probably use wrapped USDC because that's the actual dollar. So there's game theory that supports just opening up the bridge instantly. Because if he would launch it like this, he puts the mainnet live, he gets all the tokens 24 hours to be received at $0 cost basis, so nobody has to pay tax. And then after 24 hours, he doesn't update anybody. But then after 24 hours, after the $0 value is locked in, he's like, okay, PulseChain is open, the bridge is open, go do your thing. We still have like the zero liquidity thing because everybody receives it at a zero cost basis. Actually, extremely important. And if he just announces it after 24 hours and the chain has been running, he can just launch with the bridge. And I think that would actually be better. Yeah.
Okay.
It's something to think about, yeah.
Now, is it, for those that don't know what they're doing with ratio trading, would you suggest that they don't touch that and just wait for the bridge to open, knowing that it's possibly going to be 24 to 36 hours? It's not a long time. You're not going to lose a ton of value during that process. I worry that with some FOMO, a lot of newbies not really knowing how to use DEXs and DeFi in general, you could trash yourself.
I agree. Yeah. So with the pre-bridge ratio trading, I would recommend doing it with a percentage, but only if it's like hex into something, maybe hex into PLS or hex into PLSX. I prefer PLSX for numerous amounts of reasons. If you do PLS into PLSX, maybe you're a lot safer with that one. But PulseX into PulseChain, I would stay away from. I think that ratio is going to get skewed incredibly quickly. And if you're paying like one PulseX for like 3 PulseX for one PulseChain, well, then you're expecting PulseX to perform 3 times as well as PulseChain, or you would be negative on that trade. If that makes sense. Because you're giving 3 for 1. So you expect the other thing to perform 3 times as well because you're giving 3 for 1. So I don't like the PLSX into Pulse. Pre-bridge, ratio. Even just in general, I don't know.
Yeah.
Yeah, it's...
What ratio? At what ratio would you say, okay, this is worth it? I'll trade my Pulse for some PulseX, because you seem to be more bullish on PulseX. So if you got a 5-to-1 ratio, 10-to-1 ratio, are you like, oh, okay?
Yeah, 5-to-1, I'll probably do something. Okay. I'll probably swap some PLS, small percentage, for PLSX.
Red Squirrel tells us here that Power City announced today that they have a multi-chain bridge ready for PulseChain. I'd like to learn more about that. Is that available in testnet? Is that something we can play with today? If anybody knows, please let us know.
Yeah.
Really, but in reality, he is just saying empty words all day. Huh, well, that's your opinion, and it's worth what we paid for
it. His account was test, so he made that account just for me.
Yeah, exactly.
I love you, baby.
You gotta love trollers.
Yep.
Red School. Okay, so this is good information. Price predictions. What is your hex prediction on ETH and PulseChain? My prediction is that it will still exist. I mean, the price prediction is ridiculous. I don't know. I think that because Hex is a little bit more matured, as you mentioned, we're going into its second bull market. We can expect to see probably a 3 to 4x from all-time highs, so somewhere between $1.80 to $2.25 in 2025 at the top of the bull market. I mean, I know people are like, oh, $6, $10. Yeah, I'd love that. Hey, if it gets to there, we're going to be partying. But it's a matured asset. And if you look at the history of a lot of the matured assets in their second and third bull markets, they really only go up 3 to 4 times over what they did in the previous bull market. Tell me if I'm wrong.
I think that's conservative.
You think
I think that's good.
That's good.
Yeah, because with Hex, you have this thing where it's only one community, and the leading indicator on community growth is Richard Hart's followers, because we'll never be bigger than the actual like spearhead of the founder of the thing. The bigger the founder gets, the bigger the community gets, the more buy pressure we have amongst everybody. And if you have Hex, you have EHEX, PHEX, PLSX, PLS. You have 4-way split buy pressure, which I don't like. And then you also have a more mature asset with bigger liquidity pools, because EX and PX are probably going to get linked together. So you have bigger liquidity pools, meaning that the exact same economic mass going into the liquidity pool will push up the price less because there's more to be bought on market. And you have the idea that there's going to be shiny objects and new early stage projects of Pulse and PulseX. So I do think Hex is still going to perform just fine, but I do think it's going to perform like a mature asset. And if you have stakes, it's fine. I mean, if it does a 3x from all-time high, well, if you buy now, you have like a 60x at that point, maybe in like a 2 to 3 year region, and you're earning whatever 12 to 50% APY if your whatever staking ladder is. Those are still great gains.
Oh yeah.
Yeah, I just like PLSX and PLS. Obviously, I like PLS. I sacrifice for PLS, obviously, but I do think for new participants, I think PLSX will be the better play, because you can probably buy it at less multiples. Because the only thing that matters in crypto is your entry point.
Let's see. I just got a DM building on ropes. Red Squirrel just sent me a DM. Thanks for this information. I'm not going to try to read it right now, though. We're running out of time with the legend here, so we got a lot more to get into. So another question. Well, let's see. This here we got something from Adam. Let's see if Adam is nicer than test. Well, the DEX have the option for limit buys. I believe
Already does.
Yeah, we've already got that information. Limit buys. So let's talk about limit buys, because one of the things I've seen is some people, in our private group saying like, well, I put in this limit buy, but it didn't trigger. I have a feeling that a lot of folks out there think that limit buys in crypto behave as though they are stock market limit buys, where as soon as the price hits, it just goes through. That's not the case in crypto. There's a lot of variables that go into whether your limit buy goes through. I'm familiar with those. You might explain it better than me, though, Jake. So would you please help some of these people understand why limit orders in crypto don't necessarily trigger as soon as the price is hit?
Yeah. And one thing that also happens a lot is your limit buys don't fill completely. So if you put like a limit buy on a 1 inch, sometimes they fill by like 57%, because the price was only down at your range for like this amount and it didn't fill your entire buy order. So yeah, it's something you have to take into account with limit orders, and that's why you want to ladder them. So instead of putting like a limit order like 2.5 cents or whatever, you will put a limit order like 2.5, 2.55, 2.6, 2.65, and that way your limit order fills on the way down. And if it wicks up extremely fast again, because if the price is dead and somebody market buys before your limit order gets hit, he gets the thing, not you. So yeah, it's just something you have to take into account with limit orders. That's why you ladder them. You don't just put one and forget about it.
And the other thing that's important to know is that in order for the protocol, whether it's Matcha or 1 inch, in order for them to execute that, it actually has to dip below the price, so that way their ETH gas fee plus the price of the purchase still is in the profit. So the reason why it doesn't cost gas fees is because they pay for that. So there has to be margin there for them to make. Nice thing about limit orders, however, is once you approve that wallet to use your USDC, you can put in as many limit orders as you want, and it doesn't cost you anything. So as Jake was saying, when you ladder them, it takes a very small gas fee to approve it. And then from there on out, with that particular wallet, you can put in 100 limit orders and there's no cost to you. So laddering limit orders is a great idea.
Yes, and then also put your expiry date at like 30 days instead of 7 days. Otherwise, you constantly have to rebuild them.
So that's a good question. So 30 days, I tend to do mine a little bit shorter because if, for instance, the price goes really far south, I don't want to be locked into that limit. Of course, it'll already fill, but I like to be able to just be a little bit more flexible. But I guess I see what you're saying now that I see it out loud. Let's see. Will there be a limit buy option for ratio trades? I don't know. I doubt that, but I could be wrong.
There will be.
Oh, okay. So once again, I'm wrong, but
you're too hard on yourself. So
yeah, dude, this is why I do these streams, because I learn questions. People ask questions, and it's great. If I'm learning in front of everybody else, they're learning too. So, amen.
I like making everything simple. So essentially, what a limit order is I'm selling X asset for Y asset, and the only difference if you're doing like dollar limit buys is you're selling the USDC asset for Hex or whatever, or PLS or PLSX, whatever you want to do. But if you do that, you're only selling X asset for Y asset. So you could sell PLS for PLSX at a 5-to-1 ratio if that's your limit order, because you're just selling one asset for another asset at a certain ratio. It's just a ratio from USDC to the actual asset. Mm-hmm. So yeah, you can, because you're setting the ratio.
So I want to touch base on something that we discussed earlier, and you kind of mentioned it. When diversification came up, you said you weren't a big fan of it, and you gave the example that a lot of these cryptos are tied together. So when one goes up, the other one goes up, when one goes down, kind of Hart's law, if you will. What are your thoughts then? And this is just a question. I don't want anybody to get bent out of shape in the chat or anything like this, but the whole Hedron, Icosi, Maxi, Team, all of these things are tied to Hex. So now I get that they're designed to pump Hex, but they are all in the same basket. Are they, what are your thoughts on the value they bring? Are they a distraction? Is it false diversification, or is it actual diversification? What are your thoughts?
Good question. So, by the way, I have a bit of time. I have like 15 more minutes, so it's good.
Oh, you do? Okay.
There's no rush. When it comes to, I think the whole Maximus DAO is actually extremely good as long as the liquidity pools don't get too big. This is extremely technical, but as long as the liquidity pool is less than the amount of Hex that went into these derivatives, like Base, Trio, Lucky, Deci, Maxi, it's actually a net positive because it's supply locked away from the market. And if the liquidity pool is smaller than that amount, it's actually a net positive because it's now locked away. I don't look at it as diversification. It's just a better way to stake. Yeah, okay. Hedron is a diversification. So is Icosa. But like the actual, just like pooled Hex stakes, I don't look at them as diversification.
No. Okay. Yep. Crypto Viking says, bring it on, guys. Glad to have caught this live. Thank you for being here. Denise, ETH proof of work can also be used as practice to get ready for the PulseChain. There is a lot of value in that statement. Do you believe that to be the case?
Yep, 100%. Yeah, I think it's an incredible practice because it also showed me personally the liquidity pools and the importance of the AMM bot. Because if you were early on the chain, because I was like scooping around at like 3 a.m. And I was looking at the liquidity pools like, the hell is happening here? It just, all of the ratios were the same, nothing changed. But it's also logical because it's the exact same supply of Ethereum.
Yeah.
So they don't have to buy it up. So I guess with these system safe forks I copy from Ethereum, I think there's massive opportunity in the beginning of the chain because they can't really, I just had this realization, they can't play with the liquidity pools because in PulseChain they have to play with it, otherwise it's just screwed. Because there's like, whatever, 1.2 million X more supply of PulseX, and then the rest hit ETH. With Ethereum proof of work taught people how to add a new network into their MetaMask, which seems like a big step, but it's actually incredibly simple. Open a MetaMask, click on where it says Ethereum, add network, and you're on another database, aka blockchain. It's interesting.
Yeah, one thing I'll add to that, just from a security standpoint, is if you do intend to play around with that stuff, take any of your ETHW copies or your USDC copies or Hex copies and send it to a wallet that's not linked to your ledger, or wherever you're keeping the majority of your coins. Send it to a wallet that isn't connected to anything else. So that way, if you happen to make a mistake, you can't accidentally screw up your main holdings.
One.
We've got Bad Sports in here. He talks about the inner circle being insane. That's a cool reference to Jake's. What do we call in that group? Millionaire Mindset. What is that?
It's called Cash Flow for Life. It's a mastermind.
Mastermind. Yeah,
Crypto mastermind.
that's cool. Thanks for being here, Bad for Sports, or not Bad for Sports, Bad Sports. So yeah, so the Maxi team, all of that. Now there's something called perpetuals. It sounds like the Maxi group has launched something. There's a bunch of different coins that are called perpetuals. I'm not familiar with that. Is that something completely different, or I mean, do you even know about it?
Oh, I know about it. Yeah, I think it's good. I like the guys. I also think it's good for everybody. I mean, the thing is also like when it comes to leading indicators on like next bull market performance, you want to look at how active a community is and how much is being built on an asset or built inside of an ecosystem. And if you look at PulseChain and if you look at Hex, there's a bunch of stuff being built on top of Hex. There's a bunch of stuff already being prepared for PulseChain. There's a bunch of projects already supporting PulseChain. So when it comes to leading indicators, we're possibly in the best position you could possibly be in crypto. Because in bear markets, you can only focus on like future potential, which is user adoption, building, developers, stuff like that. It all looks bullish to me.
Yeah, that's a great little nugget right there. Is a leading indicator is how active is the community, and
Yes.
Back to the conversation we had earlier. For those people that are really upset with Hex and the price, and I staked, and the sad story, look at what's happening right now. There's so much being built. There's so much energy. The community is crazy active. We're in the worst of the bear market. We've got almost 100 people on a live stream talking with us, asking great questions. This community is very active, and we're all talking. We're all talking to friends. We're talking about it. We're doing these streams. It's getting out on YouTube. Yeah, right now it's falling on deaf ears. But when the bull market comes back and prices start ticking up, people are going to start paying attention. And that's when we're going to get what we're all waiting for, and that's price appreciation.
Yeah, and these numbers get absolutely insane. Like you're getting 100 viewers on a live stream now. The moment PulseChain launches, this will probably be like 300 to 500. And then after like the bull market comes back again, you can expect like 1,000 to 1,500.
Oh, I know. I need to get
These
a lot
numbers are
better
insane.
at my similes, not turning wins into losses. I'm gonna laugh at
Probably.
myself for a while for that one. I mean, that was funny. I don't care who you are, that was funny.
Yep.
So I know you're running out of time. We're bumping up on an hour. I've been asking a lot of questions. What's important to you right now? What do you think people need to be paying attention of? What questions maybe do you have that are going to get answered poorly by me?
I just want people to realize that in bear markets, you have this asymmetrical opportunity of the information that you get because you're getting it early, just by definition, because there's less people in the market during a bear market, so there's less people getting access to the information. And I'm a big believer. There's this book called the Slight Edge. You don't have to read it, but basically the idea is that these 1% things every day compound. And if you're acquiring information and getting better during a bear market, you have the slight edge on information before getting into the bull market, and you know how to act, you know what to do, you know the best communities, you know the best projects, you're up to date on everything, you have the best access to information. Yeah, you build the connections, you build the networks, you filter through everything. Because the people getting into crypto, the biggest danger that they have is listening to the wrong people. Because, like, I talk to a lot of people, and one of the biggest things I hear is I listen to X person on YouTube, they seem smart, but I'm wrecked. And then once you look at their YouTube channel, they're just shilling random projects that sponsor them. But people that are new to the market don't know that. So a big part of your learning curve in crypto is learning how to filter information and like deciphering signal from noise. And that's something beautiful about the Hex, PulseChain, PulseX community is we probably have the best educators in all of crypto. And I can say that with confidence because I've listened to all of them. And most of them suck. They just suck. And there's a couple guys I listen to, like Benjamin Cohen. I like him. He's amazing.
Mm-hmm.
But just
Yeah,
like
he's
when it
good.
comes to like quality of community leaders inside of this ecosystem, dude, we beat everybody when it comes to education.
I couldn't agree more. And one of the big indicators to that is when you're listening to somebody, how many coins are they shilling? And are they shilling or are they educating? Because that's a big difference. I mean, there
Good
are a
point.
lot of people in the PulseChain, PulseX, Hex community that have channels that talk about other coins, but simply in the sense for education. And what's wild is, if you're listening and you're relatively new, it's I mean, Jake, you can speak to this. I can speak to this. I don't have a big channel, but I get messages once a week. Hey, would you sponsor our coin? Would you be willing to talk about this for us? I'll give you a free sacrifice. I'll give you this. I'll give you that. It's like, yeah, no, thank you. I don't need the money, and I'm here to bring value. So, but there are people that are doing this to make money. So you got to be careful to who you listen to. It's a very good point.
Yep, I think the difference on like shilling is when you look at these like mainstream channels like the Boon Carl. I mean, the guy personal achievement wise, he's great, but the stuff he talks about, my God, dude, don't listen to that guy at all. But then, yeah, like the perfect example of like education is Cody Costa. I like him.
That dude's great.
Yeah, he's amazing. I like the dude. And he's also he's a massive asset to the community because he gives everybody a voice.
Mm-hmm.
And if a founder is willing to hop on a live stream, that's like as stupid as it sounds, that has to be like the minimum. If you're afraid to talk about your own projects, I'm like, seriously, dude, how does anybody expect to trust this at all? And people do.
Oh yeah.
And then they lose their money, and then you're like, yeah, what the hell did you expect?
So one of the things that Funding Jim mentioned recently is he's no longer going to be doing any streams with people that won't show their face. And I think there's a lot of value to that. I mean, same thing with a founder. I get that you don't want to be doxxed. There's a way to goes about this without doxing yourself. But if you're not even going to show your face, that's a red flag. What are your thoughts on that?
Oh, massive red flag. I don't like it.
Yeah.
I posted on Twitter every once in a while, like, if you're an anonymous founder and you're afraid to show your face, I don't trust you. Period.
And so it's important, anonymous founder, like, I love whales. Whales only. That guy brings.
Yeah, he's like the only exception. Like, I like it. Whales is amazing.
That's the one guy.
Yep.
But I think he does it, from his relationship to his current career, which is important.
Yep.
How do you stake Hex W? You're going to have to go through the Icosa app to do that because you're the only one with the front end that's built for it. That's about it on that. So one last question for you, and then I know you got to bounce, but I saw some tweets coming from, I believe it was Jesse at Liquid Loans, and I see some people talking about Liquid Loans in here, and I'm not sure how to take this, but I believe his tweets were in the nature of the buy and burn of PulseX isn't as important as some might think. He was giving some examples of, if you think that's a big deal, every time you buy some coin, just burn it and see how it affects the price.
Yeah, but that's not true.
Okay. I know. So that question is going to lead into you said that if you could design a perfect cryptocurrency, it would have been PulseX. Why do you think that's the perfect project, and why do you think the buy and burn is important?
So there's two angles to looking at the project. And by the way, I love Jesse. He's amazing.
Yeah.
But when I read the buy and burn doesn't matter because it's going to liquidity providers providing liquidity. Well, yes. So the simplest way to look at it, the PulseX buy and burn is just, instead of looking at it as a bot, you just look at it as a person buying. And is there any difference between a person buying or a bot buying? No, there's no difference. So of course liquidity pools act this way, but I'm not sure what his point was. Then
and to what you just said, I'm not even sure it was negative. I'm just bringing up as
no, I read the tweet as well. He's smart as hell, especially when it comes to liquidity pools and stuff like that. I like him, but I didn't understand the point of the tweet. I'm like, yes, liquidity pools move, ratios move, people put up liquidity. What's the difference? I don't know. The thing is, so when it comes to looking at projects, there's two angles to look at it. One is narrative and one is tokenomics. So when it comes to marketing narrative, the benefit that Hex has is this T-share rate, where people can say whether you're in or not and you're staked or not, the T-share rate is going up, which gives an intrinsic FOMO for people wanting to acquire T-shares in Hex, which is like a timeless narrative. And then on PulseX, you have the same. Whether you're in the market or not, the PulseX buyback and burn is buying and burning. So when it comes to narrative, it's amazing. It's DEX is one of the most breakthrough technologies we've ever seen in crypto. Like DEXs are beautiful, beautiful, beautiful. And then you have this narrative of like, it's going to keep buying and burning whether you're in or not. So you kind of have this FOMO narrative, marketing narrative as well. And there's a ton of interesting statistics to share of like so much has been burned, and that like triggers FOMO in people. So narrative side, marketing side, it's amazing. But then you also have the actual tokenomics. All of the supply gets minted day one. It's deflationary. You have an unlimited buyer inside of the protocol that keeps buying. You have a community of net buyers. We could potentially keep the liquidity pools relatively low because people don't have to provide liquidity because they can put it in single site staking pools, which takes the supply away from the actual liquidity providing to staking pools. And there's a bunch of tokenomics that make PulseX a very, very interesting project. And then once you have tokenomics plus narrative plus public founder that has an amazing track record, I mean, that's just a home run, in my opinion. You're muted, I think.
I agree. Thing that's important though, don't have expectations that this thing is going to do 1000x in the first 60 to 90 days. Like it's still going to take a while for adoption. Again, it'll probably be launched near the bottom of the market, so adoption will be slow. There will be a lot of hexagons playing on it, but it's going to take a solid 9 months to a year and a half before it really starts ramping up and things start getting excited. So make sure your expectations are in line with potential reality. This has been a lot of fun. I think we could talk forever. Do you have something else to say there? Sorry.
Yeah, one last thing. I see it in the comments. Will's only and Kareem. Kareem does not get enough credit. That dude is smart as hell. I like him a lot, dude. I know not a lot of people talk about him. He's kind of off into like the background, but he's doing massive things. I freaking love the guy. He's one of the best educators. Like Wales, Kareem, just like every influencer, like Gerardo, K4K, RH Max, all of the big guys in this ecosystem, dude. Try finding better educators. You just can't.
No, it's great. And like you said, Corey Costa's awesome. It gives everybody a voice. Ask questions. Too many names. It's hard to keep up with.
Yep.
So 72 people in the chat. If you enjoyed this and would like us to do it again, let's see a thumbs up. I need to have at least 10 thumbs up or I will never talk to Jake Sharp again. That's setting myself up for failure. All right, brother. What do you got going this afternoon? Anything good?
No, just work.
Just
so it's all good.
Oh, that's good. Yep. It's a beautiful day. Beautiful day here in Michigan. I'm heading out into the woods and just taking in. I'm working on my energy channels, man. My meridians, building those up.
That's deep, bro.
Yeah. You know what that's from.
Oh yeah, 100%. Yep.
That's where I need to be. All right. I think it's Kasia, Kaisa. How would you say that? I think it's Kasia. I'm just going to go with that. Kasia.
He or she, I'm not sure, but he or she creates amazing clips. I share them on Twitter.
Yes. Good. I think knowing that they are present, we're gonna see your face on Twitter again, and perhaps making fun of my face. It could happen. I hope it does. I mean, what is funny is what is funny. So, all right, ladies and gentlemen, this has been a blast. Jake, I can never thank you enough. I really appreciate you taking some time, educating the community, chatting with me. It's always a pleasure, and we will do this again, hopefully in the near future. Everybody, thank you for being here and have a wonderful day.